Looking at the latest trends, we can see that home buyers are taking advantage of historically low interest rates. This allows them to carry an extreme amount of debt spread over decades at a fixed cost. Of course, most people don't take into account that over these decades, the actual amount paid for the home could be more than double the asking price. Either way, people aren't going to stop taking on more debt. As it grows, it puts additional pressure on the fragile system and will only be a detriment long term. But hey, who cares, right? You came here for the truth, so let me unveil that for you. Today we are going to look at what you need to know. We're going to talk about the real estate market in the US as well as Canada. I'm going to talk about the evictions and the moratoriums and what's going on with people's debt. We are going to look at how that connects with the hotels and the offices and all of that. I've got other economic factors to discuss with you today. Look, if you want to know which tickers you should be looking at and why this stock is going to be the next Amazon and which IPO you should be putting your money in, you're on the wrong channel. I'm consistently criticized for that on a daily basis. And then when I speak about it, I'm criticized for then speaking about it. Look, all I want to tell you right now is that I'm trying to provide you this information and you do what you want with it. This is how you become empowered and knowledgeable, not simply by copying what somebody else is doing. Are you seriously telling me that people go out there and they look at what others are buying and copy that, and as long as the market continues to go up, that in fact, most of the time they're doing well, so that's okay? That's craziness, but people are doing it consistently and it never ends well. Enough ranting, let's go. U.S. home prices jumped in October by the most in more than 6 years. What's going on here? I mean, the inventory is so low, they tell us. Oh, there's no homes anywhere. Well, actually, that's not the case, especially right now where you have more opportunity than ever before to basically choose where you want to work. So many of these businesses have said permanent work from home situation. Who knows what's going to happen 2 years from now, 5 years, and 10 years, who knows? But it looks like the direction for many businesses, at least for a period of time. Anyway, they're trying to use this whole there's not enough inventory excuse to push the price of homes up. You know, the real estate agents, the realtors are always going to tell you that you have to buy a house today. They pressure you, and for good reason. This is how they make their money. But you look at all of this and realize that the prices of homes have escalated so dramatically, and wages, on the other hand, for the vast majority of people, I mean, that's not even to scale, but it is a significant difference, okay? You can take that back decades and decades, or just look over the past 20 years. All you need to know is that there's a big problem here, and the prices of homes are constantly being pushed higher by low interest rates. We know that to be the case. We can see what's going on with mortgages, and this article is basically just giving the stats related to the Case-Shiller index. Yeah, it's coming up significantly in the last year, and for no good reason. 1 year price change percentage by metro area, October and September 2020. The green is September and the blue is October. That red line right there, okay, if you could see that, that's the Fed's inflation target of 2%. Look at all of these different cities: Phoenix, Seattle, San Diego, Los Angeles, Cleveland. Every single one, all right? All the big cities listed right here are all way over what we're looking at. I mean, in the case of Phoenix, right here for October 2020, right here looks like, you know, almost 13%. 13%. I mean, that's so extreme. Seattle, in this case, looks like it is almost 12%. I mean, just take your pick. It is so excessive. But the Fed's inflation target is 2%. Well, we have to print more money. We can't get to our inflation target. Oh, increase interest rates? Well, we can't do that. We're not at our inflation target yet. I mean, what kind of lies, what kind of garbage do they want you to swallow? It's disgusting. It is absolutely sickening when I see people that are telling me that inflation is not present. Where are you looking? Are you looking at the core PCE rate? Are you looking at that garbage? Are you looking at the CPI? None of that is realistic. Even using other indicators, not just the one that they put out there to tell you the quote unquote current inflation rate, and they have others that are more broad, and the government's own numbers will tell you a much more realistic story, just like the unemployment rate, just like others, okay? This is ridiculous when they see that these type of things happen all the time and people just believe whatever the heck they're told. Real estate optimism blows past the levels previously in 2020 here in Canada. Belief in higher home prices lifts the consumer confidence index. There's only one direction for homes in Canada, and that is up. Is it possible for homes to go down ever? Absolutely not, because kittens and rainbows are what you need to know. I mean, it just... There's no chance. There's no chance. Ask any realtor, ask any real estate agent, ask any mortgage broker. I mean, they will just confirm that for you. I mean, it's no. They can't go down. It can only go up. U.S. hotel occupancy weeks ending with specified dates going from, it's basically showing us from February timeframe up until present. And although that started to surge up, you can see that as we came into the later part of this year, this has actually declined yet again. And it looks like 36.8% right now. The last time I did a video about this, there were 1 billion empty hotel rooms. I mean, that's so extreme. I didn't realize that, there were actually that many that many could even be there, but apparently 1 billion empty rooms. I don't know how they get to this number, but apparently that's the case. It's so unbelievable how an industry has been so disrupted, and they had hotels that were dating back for 100 years and they were doing so well consistently. They're doing multi-million-dollar renovations, and then suddenly now they have no revenue. They got to go bankrupt. It's crazy, but that's what's happening today. People leaving Hawaii permanently doubled in 2020. Not that many. I looked at the numbers, only several thousand people. But when you see what is going on to places, the reason I mentioned this article, these are areas that are heavily reliant on tourism. And quite frankly, without that, a lot of the jobs are leaving with it. So there isn't much prospect for the near future. So you can see people got to go. They got to find places to work. This is something that's not just affecting Hawaii, of course, but I think it's important to note that any area that is highly dependent on one thing, you're always going to have issues from time to time. It isn't going to be steady. Just look at oil. The price of oil falls significantly. What happens to that region? It takes a huge hit if that persists for a period. Check out this article out of Bloomberg. It's talking about the evictions, the moratoriums, and giving specific examples. This individual here is dealing with some major issues. Take a look. For millions of Americans, the worst may be yet to come. A patchwork of unemployment benefits, eviction moratoriums, rental assistance, and mortgage forbearance programs has helped many to make ends meet. And some of those benefits are being extended. In this one particular example, check this out. She faces eviction even though she was able in December, with the help of several programs, to pay down more than $7,000 she owed in back rent that piled up after losing her job as a housekeeper at the Hyatt Place Hotel in March. So this is a direct connection. We are seeing what's going on with the hotel industry. This individual lost her job. She was able to kind of make ends meet for a period, but now the money has run out. $7,000. And look at how many people, as I've mentioned many times before, showing you the stats, $200 to $400 is that breaking point. So this person was able to just barely get in there. But right now, there are so many people who have unfortunately been left out on the streets, or they don't know what to do at this point. They don't have any money. Maybe there's an eviction moratorium in place there, but there's no way that once that gets lifted, they'll be able to pay up. This presents itself as a future crisis that the market has not acknowledged whatsoever. And of course, the economic factors will absolutely be felt because it's millions of people. Hollywood is apparently considered to be essential, but check this out. LA County health officials ask Hollywood to strongly consider pausing production. We'll see what happens, but there was some serious backlash against this, that the music industry, movies, and so on were allowed to continue production because they are essential, but you got the restaurants nearby, which apparently are not. Any of these industries that have been affected, it really is so long. The time frame here, it's not, hey, 30 days, something bad happened, you could fix it up, you could make it work. It's going on for a year. There's very few businesses that had been shut down and open and shut down and open that can actually survive this. It doesn't matter if it's big or small. Debts and zombies. Government offered credit as a lifeline and business grabbed it. One result was a surge in corporate debt levels across the developed world. The BIZ, Bank for International Settlements, calculates that non-financial companies borrowed a net $3.36 trillion in the first half of 2020. Revenues were plunging in many industries because of lockdowns or consumer caution and losses eating into business balance sheets. The conditions are in place for a, quote, major corporate solvency crisis. This is something that at this point, you see, everything's fine. The businesses aren't talking about it. The agencies won't discuss it. There's nothing in the market pricing this in, but clearly this is such a huge problem. And it was there. It was so obvious in 2019. Now 2020, it has accelerated dramatically, but let's not talk about it because that's not, that's not nice. That's not positive. So we'll only talk about the positive unicorns. We won't talk about this. What do you want? You tell me. You can put that in the comments below. Do you want the unicorns? Do you want the kittens? Or do you want the truth? Some also see danger in offering too much support for companies with too little discrimination over who gets it. They say that's a recipe for creating zombie firms. By the way, more than ever before, zombie firms today that can't survive in a free market and are only kept alive by state aid, making the whole economy less productive. I completely agree. Fed Treasury provide 1 week reprieve for Main Street program after demand surges. I think this is an absolute joke. There was not much of an uptake previously. I'll give you the numbers on this when it all comes out, just to give you an idea of what happened, but this is nonsense. The Federal Reserve shouldn't even be in this business anyway. Why are they bailing out Main Street when the government is willing to do that, was willing to do that initially, and that wasn't even getting the uptake that supposedly was needed? I mean, this is nonsense. Wall Street behemoths generated $37 billion of investment banking fees. So the banks always win. Follow the money. This is what happens. If you want to check out the details right here, but essentially they're always going to make money no matter if the interest rates are low or high. They're going to figure out a way. They're going to take risks in one place or another, but because of their connection to the actual creation of this current financial system, they're never going to lose out. They might consolidate, they might become more powerful, but you don't have to look any further than the central banks and their involvement. It is unbelievable to see that connection, and yet they will not talk about it. And it's so integral to the understanding of why we're in this place to begin with. Charles Schwab to officially move headquarters to Denton County on January 1st. Of course, just like other businesses, moving to Texas, moving to Florida, and others. They're doing this for a good reason because, quite frankly, the taxation is too much. They can't handle it. And so there have been many financial companies that have decided to get out of places like New York and simply move on. And just a little bit of interesting news here at the end, if anybody has stayed. NFL player to be paid in Bitcoin. Now, I find this to be rather different than what we've seen before, I want to know if this is going to be a trend. The Carolina Panthers tackle will receive half of his $13 million salary in the cryptocurrency. The arrangement comes by way of Bitcoin startup Zap. And that, to me, we'll see if this is something that others start to do and the transactions start to become bigger and bigger and bigger. And we will note that this could be something that really changes the entire landscape of what the financial system is. The central banks are going in that direction, but what about the private cryptos? I'm interested to see it. I'll give you updates as we move on. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you are supporting this channel by clicking a button on your screen. Thank you very much. If you want to learn about Amazon, if you want to know about e-commerce, that information is available to you for, let's say, $1,000, many times $2,000. There's one course I just saw increase their price to $2,000, but my course, it's free. It's available at the AmazonGPS.com. If you want to learn about the financial system, you want to understand central banks, everything that they really have created today, well then these two books will explain all of that to you in very simple language. Check them out at the link in the description. And you have to watch this video. If you haven't already, I highly recommend it. Click it. I'll see you there.